You ever look at the financial headlines for a single day and just feel overwhelmed? It's like this flood of numbers, acronyms, global forces clashing, almost impossible to sort out.
It definitely can feel that way.
But here, we find that sometimes just digging into one day can show you so much. It's like a little snapshot of everything big happening. Unpack it, and you see these amazing connections.
That's exactly what we're doing today. We're going deep on Tuesday, August 12th, 2025. We've sifted through market reports, analysis, timelines, really trying to pull out the key stuff.
Yeah, cut through the noise.
Right. Help you understand not just what happened, but the why behind it, why it mattered.
Our mission, basically, is to find those little nuggets of knowledge. Connect the dots, between inflation, trade talks, some pretty wild corporate stories, even what the president was doing. See how it all came together on that one Tuesday? And as that day started, there was real anticipation, wasn't there, before the market even opened, waiting for some big economic numbers, futures for the S&P 500, the Dow, the Nasdaq. They were all pretty flat. Little changed was the term.
Felt like the calm before the storm, maybe.
Exactly. So speaking of potential storms, let's dive right into the big one. The economic barometer. Inflation. The Fed. That July Consumer Price Index, the CPI report, that was hands down the most watched release.
Oh, absolutely. Everyone was waiting for it.
So what were people expecting, and what did we actually get?
Well, the market was definitely braced. The main number, the annual inflation rate for July, year over year, it came in at 2.7%.
Okay.
Which was actually a little bit weaker than expected. The forecast was 2.8%, and it matched June's number. So slightly cooler on the surface.
But there's always a but, isn't there?
There usually is. The core CPI, that's the one that strips out, the jumpy food and energy prices to get a better underlying trend.
Right.
That rose to 3.1%. Now, that did match what analysts expected, but, and this is the key part, it was back to its highest level since February.
Huh. So headline inflation easing a bit, but the core stuff still pretty hot. Kind of a mixed message then.
Exactly. Bit of a head scratcher. Headline looks okay. Core looks sticky.
So how did the market, or maybe the thinking about the Fed, process that?
Yeah.
Especially with other data points, like the jobs report being a bit soft before this.
Well, that mix, especially coming after that weaker than expected jobs growth report earlier, it really poured fuel on the fire for a September Fed rate cut. Speculation just ramped up.
Really? Even with core inflation at a high?
Yeah, it seems the weaker headline and the jobs number were enough. You look at the CME FedWatch tool, that's the market's pulse on rate expectations. It showed a massive shift. Suddenly, the odds of a September cut jumped to more than 90%.
90%? Wow. That's basically saying it's a done deal. Up from what, about 85% earlier in the week?
Yeah, 84.5% at the start of the week. So a significant jump in certainty, or perceived certainty anyway.
Did the experts, the strategists agree, or were they saying, hold on, that core number is still high?
Generally, they lean towards the cut. We saw Seema Shah over at Principal Asset Management say basically that even though core was back at February highs, the overall CPI print wasn't hot enough to derail the Fed from cutting rates in September.
Okay.
And Eric Thiel from Comerica Wealth Management echoed that, saying you need lower inflationary readings and slower growth numbers to justify lower rates. And the market seemed to feel that's what we were getting on balance.
Interesting. And all this happened just after some political news involving the agency that puts out this data, right?
That's right. It's important context. The report came out just days after President Trump had fired the head of the Bureau of Labor Statistics, Erica McIntarfer. That was on August 1st, right after the jobs report. And he then nominated E.J. Antoni to replace her, though that needed Senate confirmation. So that whole sequence definitely added another layer to how people were interpreting the economic data.
Okay, so data out, rate cut odds soaring, political backdrop. How did the stock market react right at the opening bell?
They loved the rate cut angle. Stocks opened higher, pretty clearly fueled by that optimism. Let's see, around 9:36 a.m. Eastern time, the Dow was up 0.6%, about 266 points.
Oh, it opened.
Yeah, S&P 500 up 0.58%, Nasdaq up 0.63%. A clear thumbs up from equities.
And other markets, treasuries, Bitcoin.
The 10-year Treasury yield, which is key for borrowing costs, it actually ticked up slightly to 4.295%, maybe reflecting that core inflation stickiness a bit.
Maybe.
And Bitcoin, interesting reaction there. It initially dipped to around $118,000, but then it bounced back pretty quickly to over $119,000. Shows how sensitive crypto can be to that broader macro mood, too.
Okay, so that's the domestic inflation story setting the tone. But there was big news on the global stage, too, specifically with U.S.-China trade. A potential crisis averted, right?
Yes, a really big one. Just the day before, Monday, August 11th, the White House announced it was extending the trade truce with China for another 90 days.
Phew, because the alternative was pretty bad.
Extremely bad. This move stopped tariffs on most Chinese goods jumping to an extreme level. The figure quoted was 145%, starting that Tuesday.
145%, wow. That would have been huge.
Massive. It avoided a stark rise in tariffs with a crucial trading partner. Huge relief for supply chains, businesses, probably consumers too.
Was this extension like a sign of a bigger thaw? Or just kicking the can down the road?
More like an uneasy pause, maybe? The sources said the two sides had already scaled back their mutual tariffs somewhat, though they were still set at elevated levels. And they lifted some restrictions, things like rare earth minerals from China, U.S. computer chips going the other way. But
there's always a but.
Always a but, especially with trade. The semiconductor issue was still bubbling away. There was this report that NVIDIA and AMD had apparently agreed to give the United States government 15% of revenue from selling their advanced chips to China.
15%?
Yeah.
Like a tax or a levy?
Exactly. And analysts were immediately worried, saying this levy could hit the chip makers' margins. And maybe worse, it could set a precedent for Washington to tax critical U.S. exports. A new kind of trade barrier, almost.
Huh. That's complex. And what was the dynamic with selling chips to China generally?
Still very tense. Sources mentioned President Trump was maybe open to NVIDIA's selling a downgraded chip to China. But at the same time, China was reportedly warning its own companies to avoid NVIDIA chips altogether. So yeah, really complex, politically charged.
Okay, so we have the Fed pivot dominating, trade tensions easing slightly, but with new wrinkles. But markets are also made up of individual companies, right? Some days they have their own drama. What were the standout corporate stories on August 12th?
Oh, yeah. Plenty of individual company action driving things, too. Big swings. Let's start with what I call the Apple versus Elon Musk showdown.
Sounds dramatic. What happened?
Well, Elon Musk publicly threatened to sue Apple. He was claiming an antitrust violation over how Apple ranked his social media platform X and his AI chatbot Grok in the App Store.
An antitrust suit against Apple's App Store. That's a serious claim. What was his specific issue?
He was basically asking publicly why Apple wouldn't put X, which he claimed was the #1 news app, or Grok #5 overall, he said, in Apple's curated must-have section.
Implying Apple was deliberately holding them back.
That seemed to be the implication, abusing its platform power, essentially. Interesting thing, though, despite that threat, Apple's stock actually inched up a little bit that day.
The market shrugged it off. For now, anyway. Okay, who else? What about C3.ai? That name was everywhere during the AI hype. Sounds like they hit a bump.
A massive bump. C3.ai shares were absolutely in focus because they had plunged over 25% the day before on Monday.
25%? What happened?
They released preliminary financial results for their first quarter of fiscal 2026, and the numbers just fell well short of the company's own expectations, like way short.
How bad was it?
They projected revenue between $70.2 $70.4 million. A year earlier, it was $87.2 million. And maybe worse, their own guidance back in May was for $100 to $109 million for the quarter.
Ouch. That's a huge miss. A real reality check for a former AI darling, as the sources put it.
Absolutely. The stock had already lost more than half its value since the start of the year. It did edge up a tiny bit in pre-market trading on the 12th, but yeah, the damage was done.
Okay, so it's a tough day for them. Any other big movers, up or down?
Definitely. Celanese, the chemicals company, they plunged over 19%. They beat Q2 estimates, but then warned of a Q3 slowdown. Shows you guidance is king.
Right. Future looking dim.
Then you had Circle, the company behind the USDC stablecoin. Their stock rose almost 9.5%. They actually reported a bigger loss than expected for Q2.
But it went up.
Yeah, because their sales beat forecasts. So growth was still there. Sinclair Broadcasting jumped over 16% because they said they were looking at options for their ventures unit, maybe a sale or spin-off.
Yeah.
Investors like that possibility.
Strategic moves.
And Hanes Brands, remember them, their stock surged over 34%.
34. Why?
Reports that they were on the verge of being bought by Gildan Activewear, a Canadian rival, for about $5 billion. Huge M&A buzz.
Wow. Even in apparel.
Right. And on holding, the sneaker maker, they rallied over 12% after raising their annual sales forecast. Strong consumer demand there, apparently.
Okay.
And one more twist. Intel. Their stock climbed about 1.3%. Their CEO, Lip-Bu Tan, actually met with President Trump at the White House.
Wait, wasn't that just days after Trump had publicly called for him to resign?
Exactly. So that meeting Whatever was said clearly calmed some nerves for Intel investors, at least temporarily.
Fascinating stuff. So many moving parts. Now, let's look beyond stocks for a moment. Bitcoin had a bit of a bounce, you said. But there's a broader trend with corporations and crypto, isn't there?
There really is. We're seeing this continued move of companies adding Bitcoin to their corporate coffers. It's becoming less unusual.
Like treating it as a reserve asset.
Sort of, yeah, like digital gold on the balance sheet for some. Our sources highlighted two examples just around that time. Metaplanet in Japan and the Smarter Web company in the UK. Together, they added almost $100 million worth of Bitcoin to their treasuries.
100 million between them? That's substantial.
It is. Metaplanet bought 518 Bitcoin for about $61 million, bringing their total stash to over 18,000 Bitcoin worth around $2.15 billion at the time.
Ah.
And Smarter Web bought 295 Bitcoin for about $35 million, taking their total to nearly 2,400 Bitcoin worth close to $285 million.
So it's not just one or two anymore. It suggests a growing acceptance at the institutional level.
I think that's fair to say. It signals they see it maybe as a strategic holding, not just speculation. And Bitcoin itself, as we mentioned, was up slightly that day, around $119,267.
Okay, so let's try and wrap our heads around August 12th, 2025. You had that surprising CPI report kicking things off, sparking this huge surge in rate cut hopes.
Despite the sticky core number.
Right. Then the U.S.-China trade truce extension provided this sigh of relief globally, even with those semiconductor tensions still simmering.
Definitely lowered the immediate temperature.
And underneath all that, you had these wild swings in individual stocks. C3.ai crashing, Hanes brands soaring on buyout news, the Apple Musk spat, Intel's surprise meeting. It really shows how tangled everything is, doesn't it? All these forces converging on one day.
It absolutely does. Complex, interconnected, and yeah, pretty captivating when you break it down.
Yeah.
And, understanding these threads, it isn't just for Wall Street types.
Right.
It matters for anyone trying to make sense of the economy, why prices are doing what they're doing, what might be next for jobs. It all connects back to your world eventually.
Which brings us to maybe a final thought for you, the listener, to chew on. In a world where a single economic report or a trade decision or just a corporate announcement can seemingly shift billions of dollars in minutes, how much is our instant reaction to the news actually shaping what happens next? Or are we just, riding waves that were set in motion by much deeper currents we don't always see?
Something to think about, definitely.